Morning. It's Monday, 26th August 2024. It's Vijay here, fresh with another pre market commentary for today and for the week too. Yesterday, I had a podcast which talked of the probability of Sensex hitting 1 lakh, which means another 20% from here. That is by the end of the year. I gave you the reasons why that is feasible. Of course, in the market, nothing is guaranteed, it's only a probability. So, in my opinion and my analysis, it says that there is a high probability that we should be able to go near or at least cross the magic figure of 1 lakh in the next 4 to 5 months. Latest by Pongal is what I am thinking of. Now, if you look at past history, which I showed yesterday, it looks feasible. However, this morning, again, you will have doubts as to whether the market will come down today, go up, what stocks will do, which sectors will do well. If you believe in the theory that there is a high probability that we'll get a 20% rally in the next 4 to 5 months, then all one needs to do is to buy the index or the indices in terms of Nifty and Bank Nifty. Both of them are available as ETFs on the NSE and BSE. But our mind is like a monkey. It will not allow us to do something like that. Even if you are hoping there's a high probability of that event occurring, we will still focus on the here and now. And that is where our problems start. In fact, there is a old saying in the market which says, if I give you tomorrow's newspaper this morning before the market starts, tomorrow's newspaper will contain the open, high, low, and close of all the stocks. Even if I give you tomorrow's newspaper today, you are more likely to make a loss today by trading intraday. The reason is the volatility of the market will question your assumptions. Even you know that the tomorrow's newspaper, what the rates would be. So that is how markets are. That is why Warren Buffett, which is what I have put as the title today, says that investing is simple but not easy. So simple could be that blue chips will do well in the next 4 or 5 months. Easy is what if there is a correction tomorrow, or if there is a fall day of tomorrow, or if there is Israel war, or if the oil prices shoot up, or the dollar strengthens, Nikkei falls, JPY strengthens. So all these kind of thoughts come through the day and over the days and making us not so confident of our positioning. So it's actually very difficult to make money in the market at the best of the times. And these are not necessarily the best of the times if you have so much of information being flooded at you. So now if you look at what US is doing, US is taking a very steady and straightforward path and Europe is following. Asia, on the other hand, is very tentative, including India. We have also gone up, but we are very tentative. Even on Friday, we were. This morning, Nikkei is down by about 400 points, 420 points as we speak. Why? Because the Japanese yen has again strengthened. It has come down below 144. So below means strengthening of yen, weakening of dollar. Dollar is at around 100.6. I had mentioned last week, and I still hold the same view, that the carry trade in yen is over. Now the focus is the carry trade in the dollar. So the dollar index is what we should be focusing on. So people are shorting the dollar or the dollar index and then buying stocks or any other risk assets across the globe, including in US. So therefore, that theory of that yen carry trade is old hat in my opinion. So what has happened to the other commodities? Oil is moved up 3% yesterday, and now it's about 79.6. But if you look at it in perspective, oil used to be around 85, 86, so it is still $6, $7 below what it was normally trading. Then you have geopolitics still holding sway, but look at the Israel market, which I mentioned yesterday. It made an all-time high. So it is sitting on the tinderbox of a war and yet making an all-time high. Normally, we say markets discount the future. So if markets are supposed to discount the future, that means there should be no major breakout of hostilities in the Middle East, which involves Israel and Iran. Now, this week are important. There are some important events. One is the MSCI, which is the rebalancing, where HDFC will be in focus. And also, you have on Thursday, you have the Reliance AGM. Typically, at AGMs, you will see some big bombastic, announcements. I expect that to happen this week, this AGM too. Also, there could be an announcement about fundraising, which probably will dictate how the markets will go. Now, we also know that the auto stocks, the stocks of autos, that is, the stocks of the cars are huge inventories there. But the auto stocks are doing very well. Bajaj Auto, Hero Motor, Maruti also is stirring. So there is a dichotomy there. The stocks of autos are doing badly in inventories, but auto stocks are doing very well. However much we look at fundamentals, sometimes we have to look at technicals. In this case, liquidity. The smart money is trying to front run the possibility of the festival sales being strong in consumer durables, including autos. So while the discounts are known to all, the possibility of fresh money coming into autos, buying autos because of inflation being low, because RBI may reduce interest rates, that is my opinion. So people are front running even two wheelers. Now, there is another interesting thing which may play out today is that Infi has been accused by Cognizant of stealing their whatever formulas or whatever their software. So now this is gone. This may have cast a shadow on tech, mainly Infosys. So I would be a little careful there. Now this week there is a possibility, only a possibility, that we may scale all-time highs. This week also may see Bank Nifty get up from its slumber, probably led by HDFC Bank and ICICI Bank. PSU banks may do well. Metals, because liquidity means metals are prime for that, like Hindalco, for instance, could do well. Small private sector banks may do well. We hold position in IDFC Bank, IDFC First Bank, and Bandhan Bank. So even though Bandhan has not so many good news as far as the indexing is concerned, but the performance has been very good. So all in all, I am going bullish as usual. I am looking at the large caps because the large caps will be safer in this kind of environment. However, they will give you less money than the mid caps and small caps. So it is a little difficult to identify which mid cap and small cap is likely to go up. But if you think liquidity is going to come into India and emerging markets and global markets, risk assets will go up. Therefore, the indices are likely to do well. So it is better to be in index related stocks, is my thinking. Please note, I'm not a SEBI registered advisor. So what I do is I put my money where my mouth is. I have a skin in the game. I mentioned the stocks, and these stocks I'm not recommending, but I am there trying to make some money off this market. I hope you also make good money, and thank you for joining me. Have a good day. It's Vijay here, signing off.